Good evening. Welcome to Journey to Become Wealthy. My name is Kelvin Reed, and we got a big day. Today, the market came down even more, right? The market came down even more. If you've been watching and learning with me, I say, because I'm learning every day just like you guys, you know how to make money on the way down in the stock market. So if you saw a stock that was coming down heavy, you actually took the opportunity to make some money on that by executing a put option, right? By executing a put option. Um, the article for today is we are reaching correction territory. That means that the market is making a correction, so that means it's coming down 10 to 20% already. And this is what the second or third week in the new year. It is coming down to correction territory, and that usually means that we are almost at the bottom, right? Almost at the bottom. However, we could still be looking for more losses. Um, and I'm mentioning this because I think it's important, right? For many of you, you're new investors, right? You've never invested your money, you've never put money in the stock market, you've never seen your money come down only for it to come back up, right? So right now, this is a wild roller coaster, and all you feel like you're doing is taking losses. So for me, there's a mindset, right? And of course, my money is meant to make me money. That's the way I see things. My money is meant to make me money. However, my money can't hold, right? This is money that I'm not needing right now. This is not the bill money. This is money that I have on the side to invest. This is my savings account. So I put it in my mind for the past several years, the stock market has ran up. It has been easy for retail investors like you and I to get in here, throw some money in, make a quick couple bucks, and see some green days, right? That's all we saw for a while, green days. But now, this is our opportunity to get these things cheap. So a lot of these stocks, a lot of these ETFs, they're coming back down to prices that we can afford, you and I can afford. And also, they're coming down so low that we'll see higher returns when they start to come back to their actual valuation prices. So the way I see it, I think of it this way, right? So your parents bought a house. They bought the same size house that you bought back in 1989. They bought their house for $20,000. It's the same size as your house today that cost you $120,000, right? So think about that. Your parents bought a house 1989 for $20,000. Same size as the house that you bought today for $120,000, right? So this is our opportunity to get in and buy that our house today for $20,000 and save $100,000 later, right? That's the way I see it in the stock market, because the prices are coming down so low that it's costing us almost nothing to get into stocks that they're bound to make their returns. And now, of course, this may not happen today, it may not happen tomorrow, but it is coming. So you guys get in, you lock in, we're gonna hang in there together, right? We're gonna invest, we're gonna make us some money this year. And we're gonna try and make money on the way up. We're gonna make money on the way down. So let me get into this article with you guys, right? Let's get into this article. Here, the title: NASDAQ futures slightly lower after index closing in correction territory. Correction territory, that means it's almost down 10%. U.S. equities futures were little changed Wednesday after another choppy trading session as investors remained cautious amid rising rates, and the NASDAQ dipped into correction territory. Futures tied to the Dow Jones Industrial Average slipped by 28 points or 0.8%. S&P 500 futures fell 0.17%, and NASDAQ 100 futures inched about 0.2% lower. So, in regular trading, the Dow fell for the fourth day in a row by 339 points or 0.9%. The S&P also fell 0.9%. The NASDAQ composite closed down by 1.15% and now sits about 10% from its November record. This thing is 10% down, right? That means it is low. It is almost in the correction territory. Correction is 10 to 20%. 10 to 20% this thing has come down, right? So you guys have to remember, if it came down 10 to 20%, discounts, right? Discounts don't last always. Once they take that discount sticker off, the thing that you bought, it goes back to its original value, right? So all we have to do is invest and companies and stocks and ETFs that have good technical analysis, and we wait for them to rip that discount sticker off so that our stocks are now worth more. So let's get into the futures, right? Let's get into our routine. So we have the Dow. The Dow is down 0.96% on the day. The S&P 500 is down 0.97% on the day, and the NASDAQ is down 1.15% on the day. You guys know this thing is taking a beat down, including yesterday. It was down 2%. So just between today and yesterday, it's down almost 4%, I want to say, if not at 4%. So that's major. That's major for the markets because we have an entire indices that's coming, that's dropping. Nobody wants to touch it. However, once they rip this discount off, we going to the moon, right? We have no choice. The bottom can only go so low. You also have to realize that these major companies, these millionaire companies, these billion-dollar companies, million-dollar market cap and billion-dollar market cap companies, they don't want to suffer. This only so long if they're going to take their company's shares and stocks being beat down that way so that they can't reinvest the money in some other form. So it's a matter of time before these things start to return. So let's check out the Hang Seng. The Hang Seng is down up 0.06%. Okay, China's actually making again flat, but they're bouncing back, right? That's the Hang Seng. Let's check out the Russell. The Russell down 1.60% again. So let's check out the 5 days. 5 days, this joker is down 6.02%. So this right here makes me want to go check my Webull, right? Because y'all know on Webull, I like to look at the futures there as well sometimes. I like the way, I think it gives a good adequate look, right? We can check out the SPY. Let's check out the SPY. Let's see how far away from that correction territory it is right now. Correction territory. Let's see. 5 days. And it's not showing me the percentage that it's down. It's just showing me that it's down, right? So here, up 0.54%. Showing me down 3.41% over the past 5 days. So that's the SPY, right? Let's check out the Dow. The Dow down. Okay, it's only saying 0.93%. Okay, that's for the day though. The 5 days, 2.99% for the past 5 days. And let's go ahead and hit up this NASDAQ and see how much it's come down the past 5 days. Again, these things have been beat down, so let's check it out, right? We have no reason not to look at it. We know what we're looking into. 5%. So it looks like the NASDAQ, again, taking the biggest beat down. Like I said, almost 4%. But for the past 5 days, it's down 5%. So these things are taking beat downs. The Russell 2000, which is actually where most of the high growth tech plays are taking their profits from, it's down the worst, 6%. So that is also why we're rotating into, again, financials. Because as the Feds increase interest rates, these banks and the financial companies will actually become more profitable. They become more profitable. And in my opinion, that's also what made SoFi such a major play. Because now it's not only just a fintech, it now actually jumps in there with the rest of the financial banks. It is now a financial bank play as well. So it gets very similar to the big dogs, and it has plenty of room to grow, plenty of upside to the company. It's already valued at about $21 to $22, and the current price of it is $13, $14 last time we checked it. So I bought it early on. Like I said, I made money on the way up, and I bought back into it, trying to establishing a second position. So these are companies that I think are going to be safe. They're going to be hot for us. But as of right now, we're going to keep waiting on the bottom. We're going to wait for the correction to end. And as things start to trickle their way back up, let's not get caught by a bull flag, right? You guys know many of us got caught by a bull flag. That's when it comes down and finally we see a green day. Things start to run. You think everything's going to be all, rainbows and butterflies again. And then the very next day, it comes down even harder. It takes back everything that it gave the day before. So we have to be very careful and be very aware. That's why we built this, right? We built this so that we know, hey, what are our entry prices? What do we think is a good price? These are the 1989 prices that I was speaking of, right? These are the prices that we want from 1989. We don't want to pay the 2022 prices for our house. We want to pay the 1989 price for our house. So we're waiting on these prices to come down to prices that we like, and then we begin to buy, right? We begin to put a little money in. If it continues to come down, we continue to average down. It's called dollar cost averaging. So we average down. We bring our average down with each buy that we make. So I just want you guys to kind of keep this in mind, right? Think your parents, when they were buying their houses in 1989, they didn't think, oh my God, the prices on the housing market is coming down. They thought, no, I'm finna buy me something to invest in for the future. I am buying a place for my kids to stay, a place for my grandkids to stay. This is gonna be we're building a foundation, right? Let's build our foundation today, guys. Let's take this. let's take advantage of this bearish market, right? And I do believe that I heard, I want to say it might have been Berkshire Hathaway, the major investor for that. I want to say he said, when everyone is fearful, we are greedy. When everyone else is fearful, we are greedy. So I'm here to tell y'all, I'm being greedy, and I want you guys to take advantage of this thing with me. So again, make sure you do your research. But the companies that I think are going to be bangers for right now, for the short term, for this year, in this bearish market, we have them here. Y'all take a screenshot and do what you will with it. Just be careful. And you guys see the percentages, you see the entry price. So be careful with those numbers, right? Do as you feel. Let's check out our heat map, right? Again, you guys know we're going to get back to our routine. I'm getting off my soapbox. I know y'all may or may not like the soapbox, but I'm on it. I'm on it because my goal is to become wealthy, and I want to create generational wealth. So, and I'm very passionate about that because I came up hard, right? And I want to make sure that my kids never have to come up the way that I came up. So I do what I do every day to make sure that they never have to see the days that I saw. All right, let's see. Technology sector. We have Microsoft actually up a little bit, and that may be based on the news that they merged with Activision, that they bought out Activision, and they're now gaining a big foothold in the metaverse and things like that. So that type of news. However, 0.23% flat. We don't really care about that. That doesn't really make us any money. However, it is in the buy range for us. Nvidia came back down. Apple came back down. Apple may be coming down to a buy range. I told you I think I like Apple in the 150 range. I think 160. I might need to reevaluate that and put it in about the 150 range, seeing that we're in a bearish market. So things tend to come back a little further down. You never know. But again, that's why I want you guys to be looking for the bottom, and then you get in on the way back up. Financials are actually down 1.98%. On Wells Fargo, we know we're in Wells Fargo. Goldman Sachs down 2%. We know we're in that. Morgan Stanley actually held strong. It went up 1.83%, and it has earnings this week. I'm not sure if they had their earnings today, and maybe that's why they're up, or if they have earnings later on, and people are just waiting on that anticipation for, it's a catalyst for the company. Communication services, Facebook pretty flat. Google's down but pretty flat. DoorDash is actually up, however, it's down on the week, I know. So we had to be careful, be aware, and be careful of those things. Healthcare is steady coming down. Again, Pfizer, which is one we talked about looking into, is still hanging around that $53 to $56 range. If you guys want to consider getting into here at the $50 price and riding it back up to that $56 before you sell out of it, again, that's what I would do. I would probably buy it at about under $50, and I would be looking for it to run back up to $56, and I would be getting out of it. I don't see Pfizer actually being something that I want to be into for years and years. I see that as a swing trade, in my opinion. Same thing with Moderna. Again, as long as this virus is around, these things are gonna make money. However, it's down 6% on the day. I don't know if they had any negative news or anything like that, but if you guys want me to look into it, again, y'all know, leave some comments. DM me if you don't feel comfortable leaving comments in the public. Just let me know and we'll definitely get into it. Consumer cyclical. Amazon coming down 1.65%. Like to see them coming down because these are major companies. I want to be able to get into them while they're cheap. Tesla coming down $9.95. You guys know if Tesla comes down under the $900 range, this is going to be one that I'm going to put some skin in the game. I may not buy a full share, but I'm definitely going to buy a fraction of it at least. So again, you guys know with Webull or Robinhood, you can buy fractional shares. If you don't have to have the full $900 to buy a piece of this company, you can put in $5, you can put in $20, you can put in $10, however much you have to spare. But just be sure to, build your foundation. Begin building your foundation. Ford is down 7.92%. Look like consumer defensive actually green. We got Procter & Gamble up 3.36%, Walmart up 1%, Target up 1.74%. Energy is looking pretty flat and down, Industrial is looking pretty flat and down. And we have utilities and real estate looking pretty down. Real estate's been coming down pretty much too. I'm hearing that because interest rates are going to go back up, it's going to make the real estate market look a little more unattractive. However, I have not done research into it. The history on it, though, is when interest rates go up, of course, it becomes less affordable for homeowners to buy these houses because of the interest rates that they'll be getting from the banks. So they start to buy houses less. And of course, you guys know interest rate came down this past year. So housing prices went up, and people were just buying houses like candy. It was like nothing. They were buying houses here and there. And so I guess this is so that the decrease the supply and demand, right? They want to increase the supply and decrease the demand so that the market kind of steadies out. That's how inflation is, right? We increase the supply, we decrease the demand so that things eventually start to meet their equilibriums. Utilities, they look like they hit green on the day again, but after being down for the week, we had to be aware of these things. We had to look around. If you guys see any of these sectors or any of these companies you want to get into, you want to look into, gold look like it's bright green for the most part. It's up 12% all around, 12% all around. You guys see this just like I do, right? 12%, 5%, and so on and so forth. So that may be something. Again, you guys know I like to look into this stuff, right? Let's look at it. If we see something we like, don't be afraid to let me know, and we can check it out, right? We can check it out. So y'all be sure to say something. Let's look at our crypto heat map. We got Bitcoin down 1.36%. Luna coming back up. It's up 0.19%. Dogecoin down 1.35%. Shiba Inu down 2.56%. Binance Coin down 1.3%. Ethereum down 1.8%. And it's pretty much following the market. You guys know crypto, and I know I get repetitive. However, it is important because I have new people following every day, right? I want to make sure that they get the same information some of you guys got. So in case you are new, if you're missing out, be sure to go check out some of the older videos. Be sure to get some of that knowledge and the information I dropped on how the crypto follows the stock market and how this is a good time to get into a lot of these things because you're buying them while they're cheap and you're planning on holding for the long term. So again, you're building your foundation. You have plenty of time, at least within this first 6 months is what I believe. We have plenty of time this first 6 months to buy things low before they start to go back to the moon and come back down to earth again and go back to the moon. And you know how it goes. It's a trip, right? It's a roller coaster ride, and the ride always has to end. It always has to stop somewhere. So we got Crow down 2.84%. And what I'm going to talk about again, we're going to look into our metaverse plays. Mano down 4.59%. And Sandbox down 5.89%. The lower these things come, the more I consider investing into them. Cardano down 11.50%. Cardano, I think my average is already at $1. I have not bought any more into this. Again, I buy these crypto plays, I leave them there. If I haven't had it more than a year, I'm probably not even looking at it. Bitcoin and Ethereum are really the only two that I see. If I see them coming down really low, I go back and average down more because I know I have high averages in those. However, with these low cost coins and things that don't cost very much, like Dogecoin only costs 0.16%, or Shiba Inu costs 4 zeros and 27, I'm already pretty cheap in those. I got millions of crypto coins in those, so I'm not too much concerned about averaging down on those because I'm holding them for the long term, right? So I let those ride. So that's what I do with those. So that's what we got, right? We know the markets come down, and it's come down. What's today? Today is Wednesday. It's come down Tuesday, Wednesday, Friday. The market was open. It was up a little bit, but flat. And Monday we were closed for Martin Luther King Day. Tomorrow being Thursday, I'm actually gonna have to say I think the market may come down more tomorrow. I'm hoping I'm wrong. I'm hoping it goes green, bright red green. We're able to make some money. And, especially in some of these companies that we're invested in, I hope we're able to make some money and things just look beautiful for us. But, in the case that they don't, it's okay. It is fine. I'm not too concerned about it, right? So I just want you guys to know that. I want to show y'all this again. I have not updated my average prices in all of these. I do have an entry price. However, entry prices need to be updated, right? I created this spreadsheet about a week ago, 2 weeks ago. You guys make sure you do your own research. Make sure you do your own due diligence and be willing to get into this whenever you're ready. A company like VTI, you see, I want to have 60% of my investments in there this year. This year, because it's a very bearish year, I'm going to be less risky, right? I'm going to be less risky. Because it's a very bearish year. I want to have 60% of my money into VTI. And for this one, this is one we average in, right? We average in. Again, I told you guys we want to show consistency. Every time I get paid, I want to add $100 in here. Or every time I get paid, I want to add $200 in here. Or however much you're adding into your account, whether it's $20, $50. I want to add this into here because, again, you get paid dividends on this. So not only will you get paid quarterly, every 3 months, 4 months, you get paid quarterly. But if this goes up, you make money on the way up. If it comes down, it's not hurting you because you're consistently adding money in. And this is also a stock that has been proven to earn 20% gains year over year for the past. Well, actually, the number was 17% gains for the past 5 years. But majority of those years, the numbers were greater than 20%. I believe about 2 years, it was like 18%, 16%. But still, that's better than anything that your savings account is gonna do, or really those. I mean, even Social Security, the trust fund. I had a video. Trust fund, Social Security was only able to make 2.5% for the past several years. So this thing right here alone is gonna make you 24%. Imagine if you put all your money in here and allowed that over a year now, 24% a year. So this will make you the best money on your savings, right? So again, remember, we're going to keep dollar cost averaging into this one as we add money. And these other plays, we're going to look to get in at opportune times. And we're not looking to get them all at once. For those of you who have small accounts or smaller accounts, you find one stock or one company that you like, you get in there and you hold. If you have a larger account, you get what you do what your pockets can handle. That's always my opinion to people, whether it comes to your finances or investing or whatever you want to do. Do what your pockets can handle. Do not spend money that you need. Do not put the bill money here. This is money that you are already intent on saving, right? This money you was already intending on saving. That's what we want to put in here. Here's crypto. Crypto, again, these are my entry prices. Again, Bitcoin is currently under that 47. You guys should be taking advantage of that. I mean, it's at 41. It may come lower. Again, take advantage of that. Shiba Inu, I put 28. It's under that. Take advantage. Mana, under 350. Under that. So really right now, most of these are at good buy prices. So you guys make sure you take advantage of those and get in if you want to. Again, buy at your own risk. Do your research. See if these are things that you want to be invested in to for the long term, right? You need to know, what do you want to invest in? What do you believe in? Because otherwise, you'll end up, when you see these things come down, you won't have the conviction or the belief that it'll go back up. So that's what we got, right? And ETFs. I have not done my valuations on these ETFs as of yet. However, these are some of the ones that I plan on looking into and adding into my portfolio over time. As of right now, though, they're just in the make. So you guys ignore that if you want to. I thank you guys for your time tonight. I appreciate y'all watching the video. Hopefully you guys made some money today. Put options on the way down. I made my money yesterday, and I had a busy day at work today, so I did not do as much as I would like. But again, I appreciate you guys joining the journey to become wealthy. Before I leave, I want to mention the wealthy word of the week is ambition. The wealthy word of last week was faith. The week before that was desire. So guys, make sure you have ambition, faith, and desire in what you're doing, and you'll definitely be successful. I thank y'all for joining me, and y'all have a good night.